A futures market is a regulated contract done through an exchange at a fixed price for delivery in the future. It is not the price in the future. It's the price today for delivery later. Would you pay the same price to receive an ice cream cone today or to get it in a year? Which one is worth more to you? Maybe today, especially if it's hot. Or in 6 months, if it's in the middle of July, would you pay $5 for an ice cream cone that you get immediately? Or would you pay $5 if you have to come back and get it in February or January? Immediately. So that means that the price that you're willing to pay for something depends on when you get it. So when you look at a futures market, or what we call a futures curve, the prices that are posted for things off into the future, 2025, whatever it might be, these are not predictions of where it will be. A futures contract means the delivery is in the future. When is the price established on a futures contract?
No.
Right now. And the only difference between a December futures, a January futures, etc., is the delivery date.
The physical delivery.
The physical delivery. Most futures contracts actually do have a physical delivery. So this is the idea, that in a futures contract, I'm going to keep repeating this because nobody ever remembers it and they don't believe it. A futures contract, the price is the price right now for delivery later. If the spot price today for a spot cargo of Brent is $73,
okay,
the ICE futures contract for delivery of Brent in December 2019 is $82 a barrel. What will be the actual physical spot market in December 2019? We don't know where the price will be. That's the real answer. Nobody knows. But what is your best guess? 73. Now, I'm not making that up. I can give you a copy of the statistical analysis done by, I think, J.P. Morgan, where they've looked at futures contracts and the forward prices and then tracked the spot prices. The best guess for the price of oil in the future is simply the price today. Will you be wrong? Yes. But you will be less wrong than if you use the futures price. Once again, the future in futures means delivery. The price is made today. Now, the value of delivery in the future varies according to a lot of things, but it has nothing to do with where people think oil will be. Well, that's not true because some people actually believe that it's a prediction, but it's not. Okay, what about a swap? We have the same sort of, have you ever seen the futures market, ICE or whatever? All the contracts listed, they list them by month, et cetera. You'll have, January 20, 83, et cetera, 84, 5, whatever it might be. The shape of the curve can, do whatever. So they list all these contracts. So these are all the prices going forward for delivery in the future. We do the same thing with these swaps that I talked about. So swaps will be listed in the same manner. A swap price represents exactly the same thing as a futures price. It's the price today for delivery. Now, of course, you'll say, but wait a second, a swap is a financial instrument. There is no physical delivery. But, the oil swaps we're talking about, there's no physical delivery. But if we buy a December 2019 Rotterdam barge gas oil swap at $600, how will we settle that? Which is to say, if we buy at $600, what price will we be selling it at? Platts Rotterdam barges. Where does Platts get their numbers from?
The market.
For delivery and purchase of physical barges of gas oil. So the price on the swap represents delivery in the future, in this case December 2019, of physical gas oil. So the swap price means exactly the same thing as the futures price. It's not a prediction of where the price of Platts will be. It represents the price today for delivery of, in this case, barges in December 2019. It means the same thing. All right? That's a key element. Futures price, swaps price are not a prediction. They're the price today for delivery later.